Kaspar, we are going to look a little bit forward now. Last week we looked back.
Oh, 2 weeks ago we looked
2
back.
weeks already, yeah? Yeah, that's right. Well, yesterday you gave a seminar in the office, and I think I want to talk with you about one topic of that seminar, which is the healthcare sector.
Yes.
Healthcare sector, I think it's something that we all know is going to be always there. As long as we human beings are on this planet, we will need to be taken care of our health.
Yes.
And I think it's in a world we are becoming much more aware of the importance of that. So, and it's also one of the sectors that was being highlighted as most potential for 2023, right?
Yes.
Give me some insight. What should people look at?
So indeed what we did yesterday with the group, we looked at the outcome of a combined effort of all the reports, of a lot of reports that we saw from banks and other institutes, and that we combined.
Yeah.
So if you are an investor and you're a client of BNP Paribas, and they will make a really nice outlook for 2023, and they send it to you, and you will look at it and think, no, that sounds good, and this is going to be nice, and this and this. And if you are a client of Santander, you will also receive a really nice report. What we try to do is we combine those reports, not all of them, but in this case, I think we looked at 10 main important drivers in the economy.
Yeah, such as JP Morgan, Morgan Stanley.
JP Morgan, Nasdaq, BNP Paribas, ING, Credit Suisse, Citibank, Forbes, Fidelity, BlackRock.
Yeah, so like the major analyst banks that have a specific department that have.
So we mapped that. So we said, okay, on a sector level, because they do, of course, more in their reports and they will make really nice reports. But on a sector level, we mapped it, and then we tried to find the sectors where the most positive outcomes by individual institutes.
And in this case, between energy, tech, healthcare, sustainability, semiconductors, consumer staples, and what was the last one? Industry.
Yes.
Healthcare was the one with the consensus.
With the most pluses, yeah.
With the most pluses. So
and after that there was technology, and then energy. And yesterday we also spoke about the energy and about the technology. And technology, that is to touch up a little bit. There are really big chances in the technology sector. That's what they all say, but there are also still a lot of risk in it. So you have to do your homework. And that's the same for energy, but with healthcare, it is estimated that the whole sector will go up. So that's always nice.
Yeah.
And if you are an investor and you do your homework at the beginning of this year and you say, okay, where can I shuffle? And if there is a sector where the whole world is positive about, never swim against the stream, no? So why should you do this? Yeah. No. If there is one report, okay, that's one thing. But if the whole market thinks that that's going to be benefit, and why it's going to be benefiting, that's because the US healthcare, I focus mainly on the US, is growing faster than the US economy estimated for the coming years. The economy of the US is estimated to have a growth of 1%. This year it's going to be the main driver in the Western economies. But the healthcare, also the years after, is estimated they grow faster. And if you look at the next 5 years, the US national health spending will grow with an average of 5.4% a year, and in 5 years it will be 20% of the GDP in the US.
That's substantial.
Yeah.
I think that's one of the reasons that you should definitely have a look at it.
Yes, you should. and so also we looked mainly at stocks, at shares of the US, but also some of Europe, Switzerland, for example. And what we did, we made a short list first based on the size of the company.
Market capitalization.
So we made a short list, and that was the outcome was United Health, Johnson & Johnson, Pfizer, Novo Nordisk, Merck, Roche, CVS, and Medical Properties. And we did our fundamental analysis on it, and then 3 companies came out, and we don't say you have to buy them because they will go up, but based on our analysis, so we looked at a lot at income, at free cash flow, at debt, at assets, at dividend, at PE, etc., etc. So we have them. I think we can put them in a screen. We made a
you did so like mapping again, no, to see.
Yeah. So we went from high to low.
Yeah.
And I've done
And an eventual outcome based on dividend and growth of earnings. What will be the total percentage of growth for the next year, right? That's how I understood it.
Yeah, so in this chart, in this overview, you see the PE and the forward PE, the dividend and the forward dividend. On average, those companies, I think there are 8, they will generate next year a dividend of 3.6%, 3.26%, sorry.
Okay.
And the price earnings, there is a big difference in. And we also looked at the increasing of the profits that you can see in this table, and we shared it with you. But we went much deeper into it. What I said before, we looked at the debt and the profit margin and etc. etc. And it's a little bit too far to explain it here.
Okay, so 3 companies. What were those 3 companies that came out?
United Health,
Insurance.
health insurance.
On health insurance, yes.
Johnson & Johnson,
Products.
and that's a little bit different one. That's the last one, medical properties trust. Real estate.
So hospitals.
Yeah, they have mainly hospitals. And just before I entered, I got a message of a client, and he said in a message that Johnson & Johnson announced in November this year to split up the company.
Okay.
They split it up to a consumer. They have a consumer business, retail business, and the producement of medicines. And they want to focus more on the medicines. So that just came out. They're working on it for years, but that was announced that probably Johnson & Johnson will split up. Okay. So it's interesting to see what's happening at this moment.
And what are the big difference between those 3 companies, if you look from a fundamental perspective?
Yeah, they all have some benefits. So it's not like they have all high dividends and all in growing PE and all no debts and in all high assets. They are different companies. But I think if you are willing to invest in a sector that probably will grow, and you do your homework further, and you have to do it yourself, and you combine those 3 companies, then you are in that sector, but you have all kind of subsectors, but as what you said, insurance, properties, and products.
It's much broader than
and then you can say, okay, I want to put more in that company and less in that company, of course, up to you. But if you look at United Health, the earnings and the profit will grow 10% probably this year and in the coming years. They have a total assets of 241 billion.
It's massive, yeah.
Total debt of 48 billion. And they have a really low profit margin, 6%. So that can increase. And if you look at the chart, if you look at the yearly chart, I think there's upward potential because it dropped a lot in the last
insurance
month.
Companies are also very much related to interest rates also.
Yeah, and it's the biggest insurance company in healthcare insurance company in the US. So it's a really interesting one. Net income is 19 billion, and if you set it out in what Warren Buffett always does against the debt of 48 billion, then you can see they pay in 2.5 years based on the income. They can pay the debt back. Yeah. So I think they have a strong position, and I think this is especially the healthcare sector is growing in the US. Absolutely. So that was the number 1, and number 2, Johnson & Johnson. And the best thing about Johnson & Johnson is that they don't have debt.
Yeah, that's incredible. Huh?
That's incredible.
Yeah, of course I look at stocks.
Net debt, so they have debt.
Yeah, of course.
But they have
never
cash.
really saw a lot of companies that are in a situation like this.
No, they have cash, 34 billion, and they have also debt around 34 billion. So net, they have no debt. And net income also 90 billion, so even stronger than United Health because they can pay it in 1.5 years. Yeah, they can pay it back. Total assets also a little bit lower, 180 billion, free cash flow of 17, and profit margin of 20. And the future earnings, they are less interesting than United Health because it is expected this year 10% growth, and with them it's an expected 3% growth. And the dividend is higher than United Health, around 2.5%. And if you look at the chart is there. It's not that strong as.
No, it doesn't give you a clear. Okay, I want to buy this.
Yeah, no. It's a quite defensive. The whole sector is in general quite defensive.
Yes.
And Johnson & Johnson is also.
Is an example of that.
Yeah, I think so. Yeah. And if you go to the last one, medical properties trust, it's a more risky one. You should look at it as a real estate company.
Yeah.
And that's why I directly want to highlight they have 90 billion of assets and around 11 billion of debts. And that is for a real estate company reasonable. So they have they went down a lot, 15% in December, because one of his biggest tenants, and it was not sure if they can extend their contract, but that is finished. But of course, there's a big pressure on them because of the cost of money, because of their they have to lend a lot, of course. And that is increasing.
And variable interest rates.
Yeah.
And if they have to refinance.
And it's also neutral, but a little bit downtrend, because if you see from the beginning of the year, they lost.
It's interesting to see how long they've been around and what happened in previous moments when they were with high interest rates. I think it's not a company that just exists. It must be longer there.
Yeah, but the problem is it goes so fast, the increase in interest rates.
Yeah.
And it's expected they don't grow this year. Profits will go down 1%.
Also the next year, so we looked at it.
Yeah. So that's not positive. But their price earning is around 6-7.
Yeah.
And that's really positive.
That is good.
And
the dividend, of course.
The dividend, they pay out based on
current price,
expectation, 9% dividends.
Yeah,
but if there's something happens with the profit and they can't pay out the dividend, of course, then if they can't pay out, they won't pay out.
No.
But it is estimated that the profits will go down a little bit, and if they maintain the dividend, even when it goes down to 7%, of course, the share price will also probably go down. But from a dividend perspective, it is an interesting company.
Absolutely.
Total, now what I said, but the profit margin is 77%, so there's pressure on that one.
Yeah.
Now, from a technical perspective, quite neutral. It's another company. Be careful with it, but it's interesting to look at it, do your homework, and look if it will fit in your portfolio.
There are options on it as well, so you can always consider, okay, I'm going to use part of this dividend to buy cheap put, insurance. Maybe that's a little bit too complicated if you don't know how options work, but I do think that is something that you could consider. So all in all, I think it's a good summary of 3 interesting companies. We already mentioned the ETFs last week, didn't we?
We did so. But we can repeat them.
Yeah, if you don't want to buy individual stocks, you can obviously also look at ETFs, and you can focus on breakthrough, healthcare breakthrough, genomics, which is more about doing it yourself at home, if I'm not, that's correct, yeah. And then you have the innovation stocks, iShares Healthcare Innovation. Those are, we will put them in the screen, no? So you have the names.
So do your homework for that, but you can also combine and say, okay, I don't have anything in that sector, I want to invest a certain amount of money, I take some ETFs, I take some shares, and maybe if you look at the overview, you say, no, I want to have that share because dividend is more important for me than that, whatever. Okay, but this is an idea to build up a subsector in your portfolio for this year.
Yeah, absolutely. And it is a consensus by larger institutions. It's not our real opinion. We're sharing consensus so everybody can make or determine for himself whether or not this is something that you would put money in. But it's, like I said, broadly, it's a broad opinion in the market that this is where you should be for.
And if you invest in this, you invest in health.
Exactly. Thank you for watching. See you next week, and of course, as always, give us a